I've been banging the drum about this the past few months. Markets hate uncertainty. In my opinion, I think the US stock market was poised to pop regardless of who took office, and it's not necessarily down to the Trump trade. Back in 2020, we had the Biden bounce. Whichever way things swung, when the election result was confirmed, the period of uncertainty was over, and it just left a more predictable landscape for investors and the overall market. So, what's going to happen once Trump takes charge? Are the Trump tariffs going to break the economy, or will America enter a new golden age of growth? In this video, I'm going to break it all down and look at some potential outcomes for Trump Part 2. Keep in mind, all of this is not financial advice. It's just my opinion as an investing expert who's interested in keeping an eye on market movements. This month, we partnered with XTB to bring you the latest market news and investing insights. With Trump taking office, there's an expectation of lower taxes, increased tariffs on imports from outside the US, lighter regulations, and a focus on more traditional types of energy production like oil and gas. If Trump lowers corporation tax, this could be excellent news for the profit of companies, because a tax reduction essentially lowers a business's costs. As a result, we might see a lift in stock prices all around and a boost for stock market indices like the S&P 500. The problem is, this is almost like an artificial inflation of profits, because a lower tax rate just means lower costs. And it doesn't necessarily mean that companies are growing their profit margins because they're actually performing any better. So it could then appear like the growth is slowed once the immediate benefit has been baked in, which could be bad for stock prices in the long term. Tariffs on imports from China are likely going to increase the prices of loads of items, because a tariff is basically like a tax placed on international imports. Trump wants to use them as a way to raise money instead of using internal taxes. The idea is that by making foreign goods more expensive, the US government can bring in more dollars and also create a better incentive for people in America to buy US made goods. But realistically, this is just going to mean higher prices paid by consumers. However, in his last presidential term, Apple, whose iPhones are manufactured in China, managed to actually avoid extra tariffs introduced by pleading its case directly to Trump and explaining that these costs would push up the prices of the most popular smartphones in America, which would hit the pockets of everyday US citizens. So if this is true for iPhones, surely it's true for other products as well. The potential loosening of financial regulations might have a positive impact on stocks in the financial sector, especially the larger banks and big financial institutions. Profitability for banks and financial stocks has mostly been on an upswing in an environment of higher interest rates, because they can generate a better return from lending and also safer low-risk assets. But as rates begin to lower, we might see those profit margins just get squeezed. However, if Trump follows through on his talk of loosening regulations or reducing the power of regulators like the SEC, it could set the scene for banks and financial stocks to make more money, potentially sending the stock prices higher. However, strict regulations aren't just put in place for the fun of it. They're there to prevent a repeat of something like the 2008 financial crash. Removing them could be good in the short term for making more money, but less oversight might mean that we run into trouble down the road. Crypto always comes into chat about regulation. With a potentially pro-crypto administration and regulator, there could be an overall boost to the cryptocurrency industry and crypto-related stocks, especially if the US follows through on its plans to create a strategic Bitcoin reserve, which basically just means holding a decent amount of Bitcoin as a bit of an insurance policy like they do with gold. The focus on bringing America's energy supply back onto home soil, along with removing fossil fuel restrictions and climate targets, is an interesting one as well. Not only could this directly benefit energy and oil stocks, but it might have a knock-on effect, reducing costs for highly intensive energy sectors like artificial intelligence or AI, that tend to chew up a lot of energy, with it being one of its major costs. So lower energy costs could give AI stocks a further boost. But of course, pulling off the energy guardrails isn't without potential consequences. The impact that all of this has on climate change in general could create massive costs for the US and American companies down the road. If current energy sources dry up, the US could struggle if there hasn't been enough investment into renewable sources or energy transformation companies. These greener firms may not be making much money today, but they are poised to be the big energy players of tomorrow. Personally, I think the sectors that are going to do well throughout the Trump presidency will be old school energy companies, particularly if you like dividend income and you don't really care too much about the environmental concerns. Tech and AI stocks, everything still seems to be bullish in this area, and it does appear like Trump's administration wants to work with tech instead of against it. And then also the larger financial stocks, whose economies of scale just means that even a slight change allows them to squeeze out better profit margins. And I think the types of stocks that could perform poorly might include green energy companies. However, this could present some interesting buying opportunities if you are prepared to buy and hold for at least 4 or even 5 years. Pharmaceutical stocks, I think these could struggle if the new health secretary, RFK Jr., follows through on his promise to make America healthy again by cracking down on the US drugs industry. And also firms that rely on countries like China for exports and imports. There's a bit of a theme with a lot of potential Trump changes. Most of it will likely be good for the stock market and the majority of companies in the short term. But in one way or another, it's essentially borrowing from the future and bringing forward tomorrow's gains into today. It gives the impression that everything is going swimmingly, but all of these changes could create issues that might bubble under the surface and then erupt further down the line. We've also seen major financial institutions like Goldman Sachs and Morgan Stanley start to actually revise their predictions for the stock market and the S&P 500 index next year, going from pretty flat to very optimistic in terms of returns. However, that doesn't really give you an insight into how this might shift things in 5 years' time, for example. What will essentially be very pro-America financial conditions means that the US can take advantage of its power as the biggest global financial player. It's a bit like a game of poker when one player at the table is holding a significant amount of chips. They can essentially bully the rest of the table by calling everyone else's bluff and playing the game on their own terms to disrupt the tactics of others who simply can't afford to bet against them. What's worth keeping in mind about all of this is that all of these changes, whether good or bad, could have an inflationary effect. So it could be a challenge for America to keep inflation and rising prices under control over the coming years. I am feeling positive about markets in the near term, but it's going to be interesting to see how all of this actually plays out in the next 4 years. But of course, as I mentioned, this is all just speculation and not financial advice. It's impossible to predict what's going to happen, and we've seen even recently that huge unexpected events can crop up at any time. Thanks for watching. Make sure you tune in next month, and if you want to check out our review of top trading apps like XTB, just click the link in the description.